Today is Monday, April 15th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and ADMIS Senior Financial Economist. Starting with the financials this morning, Alan, what is the outlook for the major central bank policies currently?
Okay, so we are seeing major central banks having divergent policies, especially more recently. So it appears that the Fed is likely to remain restrictive longer, while other major central banks will probably become accommodative sooner. So it is likely that the Fed will keep policies unchanged through a series of meetings. The May 1st meeting, the June 12th meeting, July 31st meetings, all will probably end with no change in policy. However, there's a rate cut at the September 18th meeting. So by contrast, though, the European Central Bank appears to be ready to cut rates at their June meeting, maybe even again at their July meeting. So that is a recipe for higher prices for the dollar index against the euro, plus the Bank of England will probably be cutting rates. So I think the dollar index can continue to advance, and I think that will be a trend that will probably last for quite some time.
More strength for the dollar. Mark, any surprises jump out from last Thursday's WASDE report?
Domestically, no, not really. As expected, we got lower ending stocks in corn, while higher stocks in both wheat and soybeans. Soybean stocks at 340 million bushels. We're at the high end of expectations. However, the market seemed to take that figure in stride. However, yes, we continue to see growing divergence between the USDA South American production forecasts and what is being reported from those actually in South America. For corn in Brazil, the USDA held their production forecast steady at 124 million metric tons, while CONAB lowered their estimate to 111 million metric tons. While in Argentina, the USDA, they did lower their forecast 1 million metric ton to 55. However, local forecasts there are centered right around that 50 million metric ton figure. So between the two countries, that's an 18 million metric ton difference. And depending on where the final production numbers come out, I think will go a long way at determining in what direction corn prices does finally break out from. Soybeans, however, not as pronounced. The USDA held their production forecast at 155 million metric tons. That's 8.5 million above CONAB's, while in Argentina, estimates are really centered close to 50 million metric tons.
And Mark, what factors will potentially impact grain prices this week? What are traders looking at?
Well, I think from a macro perspective, how tensions in the Middle East sort themselves out after this past weekend's barrage of missiles on Israel from Iran, that could have a major impact. For now, it seems to be a little bit of a sense of calmness, however, I'm afraid it's likely not to continue. In addition to our weekly demand numbers, we do get a monthly NOPA crush figure later this morning, which is expected to show a record amount of soybeans crushed by NOPA members in the month of March. And then, of course, weather. Here in the U.S., weather is taking on more significance that from South America. Bean harvest in Brazil now is hitting its home stretch, likely nearing 90% by the end of this week. In Argentina, harvest is really just getting underway. In the U.S., much above normal temperatures this weekend across much of the Midwest will gradually give way to cooler than normal temperatures by the end of this week. Rains this week are expected to favor the driest areas of Iowa. However, still very limited rainfall across the southern plains. So I do look for lower winter wheat ratings this afternoon, with corn plantings coming in about 8 to 9%. Same with spring wheat plantings. While the first soybean planting numbers come out today, looking right around 2 to 3%.
Last question, Mark. Looking at corn specifically, what direction do you think corn prices will break out to?
Well, despite today's weakness, I'm starting to lean a little bit to the upside here, finding fewer and fewer reasons for these large speculators to hold rather sizable short position they've had now for several months. Spreads have begun to firm up here a little bit, and I believe South American production is starting to tilt lower, which should bode well for U.S. demand moving forward, particularly on a new crop. Core demand for ethanol production is strong, as ethanol demand has been strong. So while much of the U.S. weather right now seems mostly favorable, heat and dryness is starting to build across the southern plains, which something that would shift over the heart of the Midwest here this summer, I think would really start to light a fire here under corn prices.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.